Sarah Chen opened her laptop on a Tuesday morning in March 2024 and discovered her credit score had dropped 47 points overnight. She hadn't missed any payments. She hadn't opened new credit cards. She hadn't even bought anything expensive recently. Just 4 small purchases through Klarna over the past 6 months. A $60 sweater, $35 for skincare, 2 grocery orders totaling $83. All paid on time, all seemingly harmless. What Sarah didn't know was that Klarna had quietly started reporting her payment history to Experian, Equifax, and TransUnion in January 20 people. Sarah Chen isn't alone, and she isn't fictional. She's a 28-year-old marketing coordinator from Austin, Texas, who spoke to Consumer Reports in April 2024 about her credit score mystery. The Consumer Financial Protection Bureau released data in September 2024 showing that 43% of Buy Now, Pay Later users have no idea their payment behavior now directly impacts their credit scores. That's 45 million Americans making financial decisions based on outdated information. Klarna processed over $2 billion in transactions in the United States during the first quarter of 2024. Affirm reported 61 million active users as of March 2024. Afterpay, now owned by Block Inc., facilitated purchases for 17 million Americans in 2023. These aren't small players experimenting with credit reporting. These are financial giants who collectively touch more American wallets than Chase Bank. The shift began quietly in January 2023 when Affirm became the first major BNPL provider to report positive payment history to Experian. Max Levchin, Affirm's CEO, announced this change during a February 2023 earnings call, stating that reporting positive payment history would help customers build credit. What he didn't emphasize was that negative payment history would also be reported. Klarna followed in January 2024, partnering with all 3 major credit bureaus. Sebastian Siemiatkowski, Klarna's CEO, told the Financial Times in December 2023 that credit reporting was essential for the company's evolution into a full-service bank. Afterpay implemented credit reporting in March 2024 across all United States transactions. The timeline reveals a coordinated industry transformation, not random corporate decisions. The consequences emerged faster than anyone predicted. Mortgage broker Jennifer Walsh from Phoenix, Arizona, told Bloomberg in June 2024 that she began seeing loan applications rejected due to BNPL payment patterns starting in April 2024. Walsh described reviewing a client's credit report that showed 17 different Klarna accounts, each representing a separate purchase installment plan. The client had never missed a payment, but the sheer volume of open trade lines triggered automated rejection algorithms at 3 different lenders. Credit scoring models interpret multiple small credit accounts as potential financial instability, even when payments are current. August 15, 2024. Conference Room 12 at the Consumer Financial Protection Bureau headquarters in Washington, D.C. Director Rohit Chopra convened an emergency meeting with representatives from Experian, Equifax, TransUnion, and the top 5 BNPL providers. The meeting lasted 4 hours. According to CFPB documents obtained through Freedom of Information Act requests, Chopra opened the meeting by stating that BNPL credit reporting represented the most significant change to consumer credit assessment since the Fair Credit Reporting Act amendments of 1996. The room fell silent when Chopra presented preliminary data showing that average credit scores for frequent BNPL users had declined by 23 points between January and July 2024. The mathematics behind this decline reveal the hidden mechanics of modern credit scoring. FICO 8, the most widely used credit scoring model, calculates 30% of your score based on amounts owed relative to credit limits. Traditional credit cards have set limits. A $1,000 balance on a $5,000 limit card shows 20% utilization. BNPL accounts work differently. Each purchase creates a separate trade line with a balance equal to the total purchase amount. A $400 jacket split into 4 payments appears on your credit report as a $400 balance on a $400 limit, showing 100% utilization until the final payment. Vantage Score 4.0, used by many online lenders, penalizes high utilization even more severely than FICO. Dr. Michael Staton, former director of the Credit Research Center at Georgetown University, explained to the Wall Street Journal in September 2024 that BNPL reporting essentially tricks credit algorithms into perceiving financial stress where none exists. The human impact extends beyond numbers on a screen. Maria Rodriguez, a 34-year-old teacher from Denver, Colorado, saw her mortgage application rejected in July 2024, despite having a stable income and substantial savings. Her loan officer, speaking anonymously to NPR, explained that Rodriguez's credit report showed 12 active BNPL accounts totaling $840 in outstanding balances. The automated underwriting system flagged this as excessive debt-to-income ratio, even though Rodriguez was paying off purchases made over 6 months. Rodriguez had to wait 90 days for several BNPL accounts to close before reapplying for her mortgage. The 3-month delay cost her the house she wanted to buy, as interest rates increased and the seller accepted another offer. Industry insiders reveal that BNPL companies knew this would happen. A former Klarna executive, who requested anonymity due to non-disclosure agreements, told Fortune magazine in October 2020 that internal modeling predicted credit score impacts for 30 to 40% of users. The company proceeded anyway because credit reporting was necessary for regulatory compliance as they expanded into traditional banking services. A firm's internal documents, revealed during a shareholder lawsuit filed in September 2024, show that the company estimated credit reporting would reduce user adoption by 15%, but increase profitability by 38% through improved risk assessment. The Federal Trade Commission opened an investigation into BNPL credit reporting practices in November 2024. FTC Commissioner Rebecca Slaughter stated during a December 2024 hearing that consumers were essentially enrolled in credit reporting without meaningful consent or understanding. The investigation focuses on whether BNPL companies adequately disclosed that payment behavior would affect credit scores. Early findings suggest that fewer than 12% of users read the updated terms of service that mentioned credit reporting. Even among those who read the terms, focus group testing revealed that 73% didn't understand the practical implications for their credit scores. Credit repair attorney Leslie Tane documented the aftermath in her practice. Between April and October 2024, BNPL-related credit disputes increased by 460% among her clients. Tane told CNBC in November 2024 that most clients discovered BNPL credit reporting only when applying for mortgages, auto loans, or credit cards. The discovery typically came too late to avoid immediate consequences. Disputing BNPL credit entries requires proving that the original purchase terms didn't adequately disclose credit reporting, a process that can take 6 to 12 months through the credit bureau dispute system. The solution isn't avoiding BNPL services entirely, but understanding their new reality. As of January 2020, all major BNPL providers report to credit bureaus. This means treating every Klarna purchase like a small loan, every Affirm installment like a credit card balance, and every afterpay plan like a line of credit. The days of consequence-free installment shopping ended when these companies started reporting to Experian, Equifax, and TransUnion. Sarah Chen learned this lesson the expensive way, but 45 million other Americans still don't know what she knows now. The quiet revolution in consumer credit assessment happened while we were all clicking buy now, pay later. The question isn't whether this change was inevitable, but why nobody told us it was happening. Your next purchase decision just became a credit decision, whether you realize it or not.